Next up is scaling real-world assets, liquidity, assets in motion. And this is moderated by Cointelegraph CEO, Yana. Prikhodchenko. Please put your hands together. Big round of applause for the next panel, please. Come on.
Hi, everyone. I hope you're doing great. And before we start, I would like to release an opportunity to say big thanks to the organizers of this event. Second day, we enjoy the content, and I really want to give a big applause to organizers, and obviously to the guests enjoying the panels. And before we start, I would like our speakers to give a quick introduction and share of what is your connection to RWA. Let's start.
Well, good afternoon. Germán Soto Sanchez. I'm the Chief Product and Digital Assets Officer for Broadridge Financial. We're a global fintech, so we facilitate investing governance and communications for financial services on a global basis. So we process about 10 trillion of fixed income and equities trades per day. So that's a real sort of tangible connection to global financial services and to the future, right, which is tokenization, digital assets.
Thank you, Germán. Hein?
Hello, everyone. My name is Francesco. I'm the head of tokenization expansion at Tether. We are the biggest stablecoin in the world, and my role is to bring RWAs, so asset and other stablecoins as well, on chain, and to drive them to be super big projects all around the world. Thank you.
Hey everyone, I'm Tesfaye. I'm the Chief Business Officer at Aptos. Aptos is a layer 1 blockchain. Our connection to RWAs is we have about $1 billion of RWAs on Aptos, and we process about $60 billion of stablecoins on a monthly basis. And it's a huge focus of ours, getting diversification on chain. So this is a huge priority for us.
Thank you, Hein.
Hi, my name is Hein Tibos. I'm head of product at Flow Traders. We're a publicly traded market maker. We were founded 20 years plus ago, focusing on ETFs. We started our crypto journey in 2017, and we do everything on one roof, so both trading crypto as trading equities. So here's where RWA come together. We can price crypto, we know DeFi, we know CeFi, and we know traditional equities. And we are familiar with trading outside of liquid hours, and all of that is what tokenization is, in my opinion.
Thank you, Oya.
Good afternoon. My name is Oya. I look after EMEA for Ondo Finance. Ondo builds products, assets, and infrastructure to bring financial instruments on-chain. So we started with tokenizing treasuries, and then we moved on to tokenizing stocks and ETFs, and we're currently the global leader in terms of market share in both.
And you can see that RWA is everywhere in the headlines, and hype keeps growing and growing. And we've just crossed the mark of 26 billion mark in digital assets, right? From stocks and credit to commodities and T-bills. The thing is, like, today we will discuss not just RWA trends, but we will talk about the scale of its liquidity. But before we start, I have a very simple and very complex question. The question is what actually RWA means. Because the thing is, just yesterday I asked a couple of people and they got struggled, right, to answer this question. And I would like to ask two of our speakers to answer this question like within 40 seconds, like if you would describe the meaning of RWA to your grandparents. Who is willing to start?
I can start. So
yes, please.
RWA is real-world assets, or more commonly referred to as just assets, as any tangible or traditional financial instrument that can be tokenized and represented on the blockchain. And by that digital representation, you can own it, you can trade it on-chain while still having collateral that's off-chain.
Yeah, thank you. Who wants to add or give its version?
I mean, there is no more to add since the answer was pretty perfect, but I think that RWAs in general are every single financial asset or non-financial that you can think of, like bonds, stocks, other stable coins as well, real estate. There is a lot of hype on real estate, for example. But I think that is not just bringing an asset on chain, but is connecting with the right infrastructure and actually the right stable coins as well, because the liquidity is there.
Thank you. Actually, it brings more clarity, I hope, for our listeners as well. So let's move on further. As you know, like New York Stock Exchange and Nasdaq, they're moving into tokenization. My question is, can it actually solve the secondary market liquidity issue, or will it bring traditional markets on-chain? What is your view on it? Salman, maybe you want to start?
Absolutely. So it's by all means going to be a net benefit, right? Right now, liquidity is very fragmented, whether it be between different venues, different chains, different assets. In traditional markets, at least, you have concepts like smart order routing, where you're looking to do best execution and so forth. So by bringing any of these assets, very liquid assets, public equity, fixed income, on-chain, and doing it within these NYSE or NASDAQ or any other large exchange is definitely going to be a net beneficial to the whole ecosystem.
And I can.
Yes, please.
And I'll add to that. I think sort of one of the challenges from a liquidity perspective is sort of traditional markets and DeFi markets are separate, right? So this, especially NYSE partnering with OKX, NASDAQ partnering with Kraken, I think that's going to bring sort of these pools together. Now look, it's going to be helpful, as mentioned. It's not going to solve the problem, right? Because liquidity, there is sort of, you need market makers, you need sort of buyers and sellers, you need sort of price discovery, you need sort of clear regulations, you need legal clarity around custody. I can keep going, right? There's a whole bunch of stuff that you need to facilitate and open up liquidity, so this really helps them.
Yes, and we'll have time to talk even more about it. But from the market structure perspective, what is missing today for RWA to have a real secondary liquidity? Is that like infrastructure, regulation, or simply demand? What is your view on it? Hein, please.
Yeah, I think there's a few very obvious answers. Like regulation, it's in motion. It's not there yet, it's in motion, so we wait for that. Then you have the infrastructure, like it's already, like Ondo tokens, you can buy them on a couple of different exchanges. It's there, it's not at full scale yet. Again, it's early stages. But then I think the big thing that's missing is the true commitment. So the demand will come, but I think it's really depending on the commitment. And one of the things that we see, if like they're listing on certain exchanges, these tokens, these RWAs, but is there a true push by these exchanges to present it to their customers, not as another token, but as a new asset class they can offer to their customers, potentially capture more of the market share from traditional players. And also for market makers, we really welcome more market makers to be active in the space, because I think, to your point, it's really about the more buyers and sellers there are, the more liquidity there will be, so the more it's a chicken and an egg story, but the more demand automatically will come because people will realize the markets are efficient.
Thank you. Anyone wants to add here?
I would just like to add one thing, if you don't mind.
Yeah, absolutely, guys. It's open discussion, right? You can also debate if you want, right?
And I will be super quick. I just want to say that like market makers, like flow traders, are super important in this ecosystem because they played, again, a fundamental role in the traditional finance environment so far, and they will be the ones that will bring probably the most liquidity in this market. I know that, like for example, flow traders is market making many ETFs issuers or other kind of financial products. But once they will be fully convinced to move into the blockchain, into the tokenization, the whole market will change by a lot.
And I just want to add, this is almost like a linear algebra problem from the perspective that there are a lot of things that have to come together at the same time in order for it to really be open. And so, as mentioned, there's a lot of progress happening across these areas. And I'm encouraged by that. And so we're seeing that, what we're talking around here, even talking about tokenization and the fact that you have these sort of major institutions sort of entering the tokenization market is part of that equation of all the different pieces that have to fall in place. Infrastructure is another piece. You have wallet providers out there, you have custodians. All of this is necessary. And so we're seeing a lot of progress in that. So I'm encouraged.
Yes.
I guess just to add real quickly on that, Also, the types of assets that have primarily been tokenized to date mostly have been money market funds and private credit. We're not, except for some of the work that Ondo's now doing on their side, now they're focusing on like public equity and so forth. I think historically they just haven't been assets that trade at high volumes. Mostly a lot of it's been buy and hold type assets. So I do think that you're going to see a lot more secondary liquidity as people start to shift into just traditionally very liquid products.
Yes, but we also talk about like liquidity because you know that like, volumes are big, but daily volumes are very low. We will touch point of this as well. But my question will be also around distribution because we always talk about tokenization, but it seems like the real bottleneck, it's not just tokenization, but it's distribution. And who owns the customer today? Like institutions or platforms, protocols? What is your view here?
I think initially, the initial adopters of tokenized assets, particularly like the ones we're doing where we're giving access to US listed stocks and ETFs, that was a very natural fit for retail clients in regions that couldn't efficiently or cheaply access US markets like APAC or LATAM or Africa. And the crypto platforms, both centralized and decentralized, had an amazingly impressive user base that quickly took to that and started buying these instruments. So most of our initial TVL has come from that client base who wanted to access US markets. I think the next phase will be more institutional, where asset managers and more buy-side players are looking to replicate their strategies on-chain. And they trade a lot more and they trade a lot bigger. So I think that is going to be truly impactful.
And you want to add?
Yeah, maybe one thing to realize, if you think about that 10 years back when the Coinbases, like all of the big platforms were founded, over the years they captured a lot of AUM from the traditional players and it all moved to the Coinbases of this world. If you talk about who owns these relationships, it's the platforms that can pull triggers and they can really move the needle to offer it to their customers. And I think right now what the more crypto native players really need to realize is that the banks are not sitting on their hands anymore. They sat on their hands for a long time also because of regulation. Right now the banks see this opportunity and they also want to jump on it. So I think in the end it's on the distribution side where the relationship sits, and I think it's a big opportunity for the more crypto native players to really try to move forward and be more active in the space.
Can I add just a small thing here? I think it's like 90% of the tokenized products today are distributed as private placement. So let's say that we tokenize maybe a fund or something, and then we distributed like one piece to huge banks, fund, etc. So this is how it works today for 90% of the cases. I think the switch will happen when, even traditional banks or neobanks or exchanges that can support securities, obviously, can distribute these tokens to retails. Because as a retail, of course, we work in this environment and probably most of the people here, but as long as, let's say, normal people cannot buy or they don't know how to buy this kind of financial products, this switch won't happen. So they don't even have to know that security is a token. They just have to know that is a security, like a stock, like a bond or whatever. So until there is this opinion that a token is something that is not normal, it's not something tradable, we are all here to change this view on this market, but that is the real changing point.
I think that was a very important point around private placements. Just inherently, like when you think of just private placements in the US, they're going to be reserved for accredited investors unless you're doing like a Reg A plus private placement, and still that's capped at 75 million. So inherently a lot of the product, just the minimum requirement, whether it be to be an accredited investor or minimum check sizes from a structuring perspective, have been prohibitive of a lot of retail participants. So that's why registered securities like public equity and those types of applications are going to naturally have broader adoption.
No, Francesco, I really like the fact that you touched this topic of tokens, right? Just yesterday, I had a couple of discussions. You see that the market is shifting. Some people say it's a bear market. Some people say it's a bull market, especially for institutional finance, right? Like originally, it's quite interesting to realize that DeFi was built in order to be an alternative system to traditional finance. I'm not even using TradeFi. Not everyone gets this abbreviation, right? But it's quite interesting they get merging, right? And now it's not that interesting anymore to have this retail-driven speculation and tokens. I don't have anything against crypto, right? We are still launching the tokens and the business is growing, but it's a different mindset. Now we are moving to institutional adoptions towards digital assets. And my question would be, do you see it as a potential threat to DeFi, this merge which is happening right now? Francesco, maybe you start.
I think that it's not like they're not competitors, let's say DeFi and traditional finance. So nowadays DeFi is more used for lending on like classic like Aave, Morph, etc. I think that we can use, this is a great use case actually, we can use like tokenized projects in order to use them as collaterals to get loans on DeFi. I think this is a critical like use case. We should think about it and push in that direction to make them needed and usable in a right and real way above all.
Herman, please.
Yeah, I don't think it's either or. I think they're complementary to each other, right? And when you think about TradFi, as a lot of people think of it as stable, right? Stability, and then DeFi is about creativity, right? It's about flexibility, and so I do think that there are benefits, sort of the combination of two. They're very complementary. I mean, that's why you're seeing, when we opened this up, we talked about sort of a NYSE and an OKX or a NASDAQ and a Kraken, right? They're being complementary to each other, helping with distribution, helping with liquidity, and you can think about some of the benefits, right? If you put them together, we talked about liquidity as a benefit. You have probably greater innovation, right? Again, sort of the combination of the two. You have essentially more credibility as well, right? And you have more efficiency as well. So there are a lot of benefits also from the coming together. I view them as complementary.
Yes, absolutely agree with that. And also, like we spoke about, like regulation, right? It's like magic which should happen, but still regulation is changing. I'm not talking just about RWA, but in general, you see like MiCA, right? And everyone speaks about MiCA here, and new frameworks in the US. And we know that capital does not come without clarity. And I see this clarity is coming. And absolutely agree with you that honestly, I see that traditional finance is kind of supporting now DeFi, especially at the moment when market is not that great. So I absolutely agree with you. Anyone wants to add here? So I believe this topic is very like strategic and important for today. Oh yeah?
I think the point about regulation is, what's going to drive regulatory change or what's going to make them proactive is the players who have capital. So those are the traditional financial guys, and if they come in and they say they want to do this and they understand risk management and capital efficiency, if they work with the regulators and bring in the DeFi people to explain the technology and how that works, then I agree it's a collaboration, not a competition.
Thank you, Oya. And actually, I would like to ask you about Ondo, right? Because we know that Ondo currently has the biggest market share in tokenized assets and ETFs. What do you see as the main driver for its adoption, and how will it be evolved in the nearest future?
I think currently the main adoption has come from people who are already on chain. So the people who were trading on a Binance or an OKX and they wanted access to more asset classes, they could access tokenized version of these. But I think the next wave of adoption is going to come from two places. One is going to be more traditional financial asset managers who, don't really refer to these as tokenized instruments, but they look at these as being able to trade what they already trade with extended market hours, with quicker settlement, and that way they can use this to monetize their strategy even further. And I think when those players come on chain, that's going to drive sort of a hockey stick growth. And then the second will be more retail platforms, like similar to what Robinhood has done in Europe. So all these trading apps who offer stocks and ETFs to their clients already, they are looking to shift the infrastructure into tokenized versions. So that will kind of be, again, not visible to the end investor because, like Francesco said, they don't look at this as a tokenized stock. They just want access to S&P 500 ETF. But then that behind the scenes infrastructure will be tokenized versions. So I think those people are also going to make an impact.
Yeah. Thank you, Oya.
Oh, just to add on that, I think It really just depends on the distribution channel, I think is what's going to dictate who's going to actually adopt and that type of asset class that you're actually tokenizing. So from our perspective, we view this as just an evolution in technology, similar to when NASDAQ introduced electronic trading. Now the next phase is going to be tokenized assets, and then it's simply going to be abstracted in the background. And just as you buy any other asset class, you basically would be able to buy it through your Charles Schwab account or your E-Trade account or whatever the case may be. But that's what's going to really, what we find is like the end state of this whole thing.
Yeah, and actually it goes quite fast, you know, even like Paris Blockchain Week, I remember last year and this year, the structure of the gas, you know, that you see the gas are different, and I see how fast it's changing, right? It's just crazy, and I believe it brings lots of value for the industry. Solomon, actually I have a next question for you, because we know that Aptos has Franklin Templeton, Ondo, and others on-chain. But RWA Liquidity, we just discussed it, it's highly fragmented across the different chains and platforms. It's more like 20 platforms, I believe, and we have a total value around like $15 billion and just $250 million in a daily value. How to solve this issue? So again, back to this liquidity and fragmentation topic.
Yeah, so we have, as you mentioned, Franklin Templeton's money market fund, Benji. We have BlackRock's Biddle money market fund, Apollo's private credit fund on Aptos as well. So we have, right now we're getting more and more diversification on chain, but as you noted, right now liquidity is fragmented. And that goes back to what I was mentioning earlier. There's no really smart order routing system between all these different pools of liquidity. And so what we're doing is we're actively engaging with the incumbents, the NYSEs, NASDAQs, the DTCs of the world, in order to really do a coordinated effort around how can we actually pull this liquidity together. And also, naturally, we also want to have a seat at the table from an exchange perspective. So 6 weeks ago, we launched Decibel DEX, which is fully on-chain DEX. That's also, right now, over the last 6 weeks, at about 1.7 billion of cumulative volume. Right now, it's trading perps. We'll have spot by the end of this quarter, and then we'll have RWAs as collateral on the platform as well, because we wanted to actually contribute from a liquidity perspective ourselves.
I would like still to talk more about this fragmentation of liquidity. Anyone wants to add here?
Maybe one thing, like when you mention all of these different places, like what's missing, what traditional finance has is just prime brokers that are able to just make capital efficient. And I see a future where, sure, it's fragmented, like best players win, it's sort of democratizing the whole market. There's not one exchange, there could be 10 exchanges. But as long as the underlying layer is sort of it's all aligned, like, and prime brokers can actually step in to whether it's a money market fund on a different chain or it can all be sort of aggregated, then you, like the fragmentation, I don't think is a bad thing because the best players will win. But as long as the base layer is unified, I think there will be a big push forward. And I'm aware of prime brokers, traditional prime brokers. Everyone's looking into this because money market funds could be the biggest threat for banks. So they need to ready themselves because, like, I think it's the train already left the station, and they need to make sure they're ready to deal with this.
Thank you. Francesco, next question goes to you. So Hadron makes it much easier, right, to issue tokenized assets. But the problem we see now, it's again secondary markets. Without secondary markets, it's like not impossible, right, but it's quite difficult. So basically we have now around like 400 tokenized funds, but we still see that secondary market volume is very low. How are you solving this issue, and what is your view on it?
So just to explain to everyone, Hadron is our platform for tokenization.
Platform of Tether, it's important to understand. I also had the same question when I prepared the question.
Tether is the company, Hadron is our engine for the tokenization. That's a great question. I think tokenization in general is a commodity. It's already solved. There is not much more to add there on the technology side. On the liquidity side, there is everything to add because it's the huge pain point that probably we are all facing. On the primary market, as I said before, there is the private placement that goes to the funds, the banks, the asset managers, or big corporates anyway, whoever is accredited and wants to get these tokens. The problem is, of course, when they want to resell it on the secondary market, there are two ways. The first one, of course, is the redemption. Sometimes when you issue tokens, we say like T plus something, but it's the number of days that it takes for you in order to get your money back, actually. Because when you go to the issuer and you want to resell the token there, I mean, you have to wait or T0 or T plus something. In the secondary market, again, I think that the market makers cover a crucial role there. And of course, the exchanges, what we are trying to do and what we are working on very hardly is the partnership with exchanges, market makers, liquidity provider in general, liquidity pools, DeFi. So there are many, many venues in order to solve this issue. And another one is not only on the blockchain, DeFi, crypto market, but also in the traditional finance. Because nowadays, as you rightly said, you are seeing that in these events, more and more banks and funds and traditional institutional players are participating. I was at a dinner 2 days ago, and there was like I will not name them, but all the major funds that we can think about, American funds, they were sitting at the table. And probably 3 years ago, there was I don't know, OKX, Binance,
Yes,
etc.
yes,
Nowadays,
they're still here, you know.
yeah. No, of course, but you know, the banks are gaining, I mean, power, let's say, in this field, and I think this is it's a good thing as well. Neobank and traditional bank should act as facilitator and distributor, like the classic private bankers should try to sell this kind of assets as well to the retails.
Yes, please.
And if I can just quickly add, I think, at least for me, but a number of us are highly impatient people. And so when we talk about this fragmentation, sort of when we talk about liquidity, we want to solve this immediately, right away. We think about traditional markets have evolved over decades, right? Decades, 40, 50 plus years. And what we're trying to do here, and what has been done to some extent, you know, even to date, has been pretty remarkable relative to how traditional markets have moved. You know, so I feel pretty confident that this is something that's going to be figured out. I do think, though, Warren's perspective, just from a timing viewpoint of how quickly sort of the infrastructure, the rules, the regulations are being laid for really what is the future of financial services.
Yes, thanks a lot for doing it. Anyone else? Oh, yeah?
Yeah, I was just thinking, compared to what we're doing to some of the other instruments we spoke about here, I think there's still this idea that tokenizing something illiquid will somehow magically make it a liquid asset, which is just not true. Like real estate was never that liquid, private credit wasn't, some funds who are only available to accredited investors are never that liquid. So tokenization solves for a lot of things, but it can't really make something illiquid liquid. But if you're looking at something like treasuries or stocks and ETFs that are super liquid in traditional capital markets, then when you tokenize them, you should be able to benefit from the underlying liquidity and be able to mirror that, which is something that we try to do at Ondo.
Thank you. I would like to talk about OTC markets, right? We touched this topic. So OTC markets, and Hein, correct me if I'm wrong, has more than $2 billion in monthly trading volume across all RWAs. But what type of trends you're seeing now in order to help secondary market to attract more liquidity? That's the biggest question, very high responsibility for you, right?
Yes, so we did an announcement a few weeks back where we announced our official 24/7 OTC offering for tokenized equities, tokenized commodities. And OTC is just, it's another way of distribution, right? You have the centralized exchanges, decentralized exchange, you have OTC. And the overwhelming demand we got was on the 24/7 aspect that I already briefly mentioned, which is a huge unlock for banks start realizing that if you're, let's say you have a pod at Millennium, which is highly successful, and now you can trade you have 40% more trading hours if you're able to trade in the weekends in size. So that shift is happening, and also based on the back of the announcement, we got so many traditional parties, which are not moving fast, obviously, but that realized, okay, this is something that's happening. How do we prepare for that, and how can we make sure that we're ready to support this new wave? Because you mentioned NYSE, you mentioned NASDAQ. Everyone is sort of gearing up for this, and OTC markets will naturally follow. Or you also mentioned like ETFs. So when we started in 2004, there were a few ETFs in Europe. We were the only market maker. There was basically nothing happening. In the US, of course, it was bigger with SPY. Like tokenization is the same, or like RWAs, especially on the more liquid sides or not the private credit funds. It's a sort of the same wave that we're seeing right now. Sure, it's small and there's hiccups, but ETFs were the same until they were not anymore, and people started realizing the benefits.
But actually, it's a big thing, like 24/7, and it's a new thing. Actually, I haven't read about it. Any other like major trends you're foreseeing? Because again, it's lots of things depend on you, right?
I think the biggest trend, and that's also I think the biggest justification of the whole like traditional equities coming on chain, is the perpetual market. Like of course oil, Brent. There's been a few incidents over the last couple of months, and the market, there's billions and billions of trading in the oil, Brent perpetuals and hyperliquids, which we believe is the true justification on how this space can evolve. And now it's perpetuals, it's on DeFi. It's pretty hard to access, especially if you're a traditional player, because of lots of rules and regulations. So the logical thing is in a regulated environment with highly regulated companies, like I think the ones here on in the panel, that will really bring it to the next step and accelerate the growth even more.
Thank you. Also, like continuing our topic on liquidity, I would like to ask you, Herman. Broadridge runs one of the largest tokenization platforms. Like speaking about TradeFi and DeFi, do you see that they will get merged into one liquidity pool, or will they stay separately? Back to the beginning of our discussion.
Yeah, I mean, look, I think it's going to converge, right? And in terms of tokenization platform, our tokenization platform is around 350 billion of assets tokenized on a daily basis. So it's one of the largest, or I think we view it as the largest sort of tokenization platform focused on a repo market. So that's a real life use case that's bringing incremental liquidity to the market. It is going to converge, and sort of when we think about this, it's still a drop in the bucket, right? There's about 40 trillion of kind of eligible collateral assets today, out of a pool of maybe 250 trillion. And so part of this also, when we talk about liquidity, is also about collateral and really unlocking all that collateral to make it eligible for transactions, right? And that's also just value that's just sitting there, right? And sort of extracting value from that as well.
Hein or Salman, anything to add here?
That was very well said. Nothing to
You have great speakers today, right? So the question for the end of our discussion, it's like, let's talk about prediction. We don't give any financial advice, but usually audience likes this type of predictions, but you need to take it very seriously. Just imagine that all of your prediction, we will just write an article about it on Cointelegraph, right? So you need to be very responsible for what you're saying. And just imagine that you look at this article 1 year later and like, okay, I was right. So what would be your prediction around RWA and its scale of its liquidity? Who wants Francesco? I see you're ready.
Yeah.
Our editor-in-chief is here, just for information.
Sorry?
Our editors are here, journalists as well.
Okay, I will pass it. No, I'm joking. No, I think that in the future there is a huge hype on tokenization, and so let's say that in my opinion, only some kind of assets will be liquid, not all of them. As Oya said, like it's not that if you put an asset on chain, it will be liquid. It doesn't work like that at all. But only some assets, in my personal opinion, probably bond, money market funds, of course, stable coins are the assets that will be more liquid in this market. And regarding the blockchain, probably the liquidity is going to go only to some blockchains, so not like all of them. And another thing that I would like to say is that, I mean, if a token is not connected to a big stable coin, but I mean, like USDT, of course, but I'm biased, but it won't succeed because the liquidity is there. But really, like we have more than 180 billions of USDT around the world. And here we are in Paris, we are in Europe. Everyone here has a bank account, everyone can buy a stock, a bond and everything. Where we are strongest Tether is like LATAM, Africa or Southeast Asia. There many people don't have a bank account, they cannot afford it, but they have the stablecoin, they have the USDT, and they want to spend it. This is why we made Hedron, just to to issue these tokens and to give them the possibility to invest like we do in traditional finance, not only in meme coin or in this.
Let's
stuff.
try to make it Hein and then Herman. Yeah.
Make it real short. 2 years from now, this panel will not be necessary anymore. Second, cards will be reshuffled, meaning if you work at a bank, be ready to work in the weekends. Otherwise, like the cards will not be dealt your way. And third, I think it's all about which products you want to tokenize. It's not everything should be on chain. Just think about it.
Absolutely agree with you. Yeah. Thank you so much, Herman.
Just very quickly, I think the rate of tokenization is going to be much faster than people think. Predictions vary from, let's say, 13.5 trillion to 20 trillion of assets tokenized over the course of the next 4 or 5 years. If I go back 2 years ago, things have moved a lot faster than anyone thought. There are things sort of happening today that we couldn't have imagined. So I think we're going to be wrong again. I think the number is going to be higher than that, which means that we probably won't need this panel in 2 years. And we're probably going to be talking about some new innovative product that somebody's come up with as well.
Wonderful. I like this ambition. You see, we are building the history now. We have 2 minutes to build this history.
Quick prediction is just the depth of liquidity is going to be multiples higher over the next 12 months. And that's mostly going to be a function of the shift from private placement focused efforts in terms of actually putting those on chain to basically very liquid products like what Ondo and others are doing. I think that's going to be the main contributor to the depth of liquidity.
Thank you. Oh, yeah.
I think we will solve for 3 main things: trust, utility, and access. On the trust side, there will be clear rules about ownership and structure of these tokens. On the utility side, utility will bring liquidity, so you will need to have these tokens composable and usable in DeFi. And on the access side, which we touched on earlier, we will need to fix the fragmentation of liquidity and cross-chain, whatever that word is.
Thank you. Thanks to everyone. I truly enjoyed this conversation, and I feel that we're in the safe hands, like hands of our experts. We see where is the future, and just now we just predicted what will be next. So you will see lots of posts on social media, and then we will meet again here in 1 year, and we will see if it came true. Thanks a lot. Thanks a lot, dear guests. Thank you.
Welcome to Signal Week.